Hello, it's Big Cheds, and this is the Trading Encyclopedia Daily Education series on my YouTube, Cheds Trading. Find me on Twitter at Big Cheds and Bitcoin Live, where I'm a founding analyst. For today's lesson, we're going to talk about a bearish and bullish rectangle. You can pause and read this on your own, some of the characteristics and trading strategy, all that. I'm going to go over it, but you can read this on your own. Here's just an example of what a bullish rectangle and a bearish rectangle might look like. So the idea is that you get something like this after a move up. If you want it to be a continuation pattern, if you want to use it as a reversal pattern, you want to have a trend first. You have the price advancing, for example, into a bullish rectangle. Now, what's interesting is, in theory, a bull flag can also be sideways. We know we can have rising, sideways, and downward sloping bull flags. But let's say we have a bull rectangle or a bull flag, whatever you want to call it. What matters is you have two well-defined horizontal levels, an upper level and a lower level. And again, you want this level to be formed by multiple tests with time in between the tests and price distance in between the top and the low, so you have a level form. Now, what I recommend you do is avoid playing in the middle of the channel. You want to wait for a clear breakout, a clear break of the top of the range, or a clear break of the bottom of the range. And if you're going to want to use a measured move, I recommend you use the height of the rectangle, height of the consolidation range. You can think of it as a bull flag, and then you can use the flag as your measured move. But I think it makes more sense to use a conservative target, a conservative measured move, meaning the height of the rectangle. So for example, if we were to take this one, you draw there, and then you extend from your breakout point. The same thing is going to be true in the other variety where you have a move down. You have a lower range and an upper range. Now, oftentimes, this actually is going to lead to a reversal. Same thing here, where the price kind of come up and stalled. Even though it's a bull rectangle or a bear rectangle, you can actually play it both ways. And I like that. I like any kind of a well-defined horizontal structure. This allows you to take both a reversal on the long trade or a continuation on the break of the lower boundary. But regardless, you're not going to play in the middle of the range. The one thing I will say is not attempting a long off of the bottom. You could short the top of the range because you're trading with the trend. The same thing in the bullish scenario. And the same thing is true with the bull flag. You could, in this situation, take a long off of the bottom of the range, but I recommend not taking a short on the top of the range because the price is more likely than not to continue with the trend. So you can play either a breakout, you can play a breakdown, or a long off the low of the pattern. And in the bear situation, you can play a breakout. You could play a short off of the top, testing the range, or you could play a breakdown. Again, you're trading with the trend or a clear break of the upper or the lower boundary, and you're going to avoid playing in the middle of the range, and you're going to use your measured move based on the height of the rectangle. Bullish and bearish rectangle. This is for the Trading Encyclopedia Daily Education series on my YouTube, Cheds Trading. Find me on Twitter at Big Cheds and Bitcoin Live, where I'm a founding analyst. Thank you, folks, and I'll talk to you soon. Big Cheds out.